Well, hello and welcome to Newscentre. I'm Ashmit Kumar. Now, the Union government has invited expressions of interest for the privatization of IDBI Bank. Our government plans to offload 30% stake it owns, along with another 30% stake held by the Life Insurance Corporation. So, in all, the winning bidder will get a little over 60% shareholding and management control of IDBI Bank. Sapna Das spoke to DIPAM Secretary Tuhin Kanta Pandey on the modalities of this exercise and the government's expectations. Take a look.
The government has finally invited the expressions of interest for IDBI Bank's disinvestment, and we are joined by the man of the moment, DIPAM Secretary, Mr. Tuhin Kanta Pandey. Thank you, sir. Thank you so much for giving us time. So, the first off, it's been a long road, even to these expressions of interest that you're now inviting. So, what are the basic parameters that we are talking about? Very quickly, the main takeaways, the first 2 to 3 takeaways that you would like to talk about, and how difficult has the process been so far?
Well, let me come to that process first. Actually, this is the first time we are doing a transaction which is based on a competitive bidding for a bank. Some of the things which have been happened in the case of banks, but mostly by the RBI in terms of distressed banks, and that is a different process under the Banking Regulation Act. This is a process which is based on open competitive bidding, and therefore it's a unique experience for the government and to some extent also for the RBI.
Right. Certain terms and conditions that you have clarified upon, for example, I mean, if I can just jump to some of them, like, corporate entities will not be allowed to bid. So that again is as per the RBI extent guidelines. Similarly, the acquirer will have to bring down its stake to 26%. So just share with us a bit more on that front. I mean, you have kept the spirit alive as far as the RBI guidelines are concerned. I suppose that's what they also wanted, but they have spoken about the fact that there is headroom available.
Of course, this is RBI is a banking regulator, so therefore we can't have anything to do with the banks without RBI being taken into confidence. And RBI's guidelines has got rationale, and those rationale has been, of course, have to be kept in view. Now, that's a broader issue of whether or not the industrial or corporate houses or individuals should be brought in or not. That's a different debate. But here the main point is that we are allowing the set of entities, because as you know, the banks require a lot of capital. So the banks are or the financial institutions are capital intensive institutions, because every time you have to expand business, every time you have to sort of keep your CRAR, and you have to do well within the regulated norms. So it's $2.85 billion of net worth. This is a minimum requirement. And if you are a profit, if you're an entity which has to maintain a profit and loss account, because not all entities have to maintain the P&L accounts. For example, funds have a different structure. Many of the funds do not maintain P&L account. So there it's not required, but wherever it is, 3 out of 5 years, there will be, there should be a net profit. PAT should be positive. Now, these are the requirements, basically entry level, but there are other things like, for example, which entities would be in a position to bid. For example, private banking companies which are listed. Then there could be NBFCs registered with this thing. Then there could be SEBI registered AIFs. There could be funds which are incorporated outside India. There could be foreign banks. So, and obviously this will be the subject to the extant FDI policy, which is that it can't be more than 74% in aggregate.
So keeping that also in mind, both you and LIC have decided to divest less than 61% at this point in time. Did you also keep the FDI 74% cap in mind, or was that also one of the reasons?
It's not less than 60. In fact,
61%.
Yeah,
is what you will be offloading roughly.
Yes, it is also that the government will keep a 15% residual equity, and LIC also will keep 19% residual equity for the time being. But this will be, subsequent to post this investment, it will be up to us to really decide as a time without any constraints so far as the government and the LIC on the other side is concerned. But that will be subject to, and we have to keep in mind that this is a listed bank, and accordingly I think there will be further requirements of how it will be done. There is a lock-in requirement of 40% for 5 years. That's a RBI requirement, so that the promoters which are identified, they are locked in for a certain period of, and they don't walk away.
Hadn't there been a relaxation on that front, sir, recently by RBI? Not really.
No, I mean, this is the one which is in the structurally, that 40% will be locked in for 5 years, and then they have to mandatorily bring the equity to 26% over a period of
Over the next 15 years.
Next 15 years over
or next 10 years from 5 years.
That's what we call the glide path. And let me also remind you that the voting percentage is capped at 26% as per the BR Act.
Correct.
So even if you were to be having 60% stake, your voting power is capped at 26% at all times.
Wasn't this one of the requests that had come in from your potential investors at some point in time when you had been doing roadshows?
No.
Check me if I'm wrong.
No. That is not a request which has come, because everyone understands the banking company is different from the other companies, and there is a wider ownership which is necessary, because it is in the banking company it is a board which actually controls the company, and there are restrictions on the members of the board. There is also mandatory requirement on independent directors, and there is a different governance structure for the banking companies, and of course that needs to be followed.
So two quick questions. Holding on to 15-odd%, LIC holding on to 19-odd%. These are substantial stake sales that you'll be doing, of course, along with the management control, 30-odd% each of you. Over the last few years, LIC has pumped in a lot of money in IDBI Bank. I mean, government also at some point in time has recapitalized the bank. What gives you the confidence that at the time of actual bidding, all of that will be recouped and some more?
No, I think...
and didn't LIC raise this question? They wanted to hold a substantive stake, if I may ask.
No, actually, when LIC got it, LIC has also got it as a very exceptional measure. Normally, there are certain restrictions on the LIC's holding also, that they can only hold that much. There are restrictions on behalf of IRDA, because they don't want insurance companies to hold the banks. And there are also restrictions on the behalf of RBI. In both cases, it is like over a period of time, LIC has to bring down the stakes anyway. Even if it were not today, it would have, in any case, LIC would require to do that. The question is that, in between, IDBI had a lot of problems. And then, obviously the capital had to be brought in. So in fact, the minimum public shareholding norms could not be met, because there was an infusion of capital which was necessitated because of the RBI guidelines, that if you have a certain amount of NPA and depending upon your CRAR, you got to be pumped in. And IDBI Bank itself was under the prompt corrective action earlier, so that it could not lend. And in between, and after that, I think they have done very good efforts, and they have not only come through the PCA, but they have done a lot of rebalancing in the banks in terms of corporate and retail lending. Okay. It's a more balanced bank now. But going forward, it's important that, that the capital is further brought in for its growth, and it is put onto a further growth path. And then government and the LIC actually will exit, because in any case LIC was to exit, government was to exit. So this is not something which exit was not. The only thing is that this decision has been taken to do it together in a strategic disinvestment manner, so that there is an organized way in which because the bank has, the way it has developed, it has come from the government. And from then the government, it has come to the LIC control, but
Correct.
government and LIC being substantial owners.
Correct. So also about the issue of open offer, will there be a requirement of an open offer at some point in time when this
Of course, that is a standard SEBI requirement, and that open offer will have to be done.
So acquirer will have to do that.
Yes.
Right. And so when what are your timelines for inviting the bids, the first set of timelines, and when do you see this transaction?
We want it in December. I think that the PIM has already mentioned the dates, and there is a 7 days time given for physical documents, because electronically I think the date is December 16.
Okay.
And physical documents would have to be received by December 23rd.
Okay. So, I mean, safely, starting from December, not from now, but starting from December, safely you would have at least 12 months basically to complete the transaction. So, sometime next financial year, we can see the conclusion, hopefully, of actually clinching the deal.
Well, of course, I think in the banking sector, we have to see the due diligence process, how much time the potential bidders they do demand, because they will have to look at the books and all that, and subject to their satisfaction on due diligence through virtual data room. And of course, there will be requirement of fit and proper as usual from the RBI, which has also been factored in.
Okay, and that has been clearly mentioned in your
clearly
information memorandum, right, sir? Open offer also you have mentioned, all of that you have mentioned. Just one more question, sir. You are starting off with the IDBI Bank first off, which is excellent. But there has been an entire PSB privatization agenda in the budget. Could you shed any light on that? Are we still looking at it in principle, but maybe not, really at this point in time, or anything that you can share with us at this point in time?
And we are going as per the budget. I mean, if you look at the budget, it is there that we will proceed with the transactions which are going on, and we are going on with the transactions.
Okay, but sir, the law has yet to be, tabled in the parliament and all of that. So it appears that there is a delay.
No.
Maybe on the political part, there's no
mean,
signal from there. So
no, I mean,
so,
as far as the IDBI Bank is concerned, we are moving ahead, and that was an announcement, and we are going ahead, and today we have come out with an AOI.
correct. And so also in terms of license and all of that is taken care of, because there was a deemed license. All the legal amendments were done earlier, much earlier for IDBI Bank, so there won't be any issue on that front. Or will there have to be a fresh license?
There is no issue. That has been sorted prior. It was just along with the Finance Act we had done prior. That it's a deemed license, which was actually in the Repeal Act. There was no licensing requirement under BR Act, but it has been amended subsequently to say that the license has been deemed to have been provided under the BR Act.
Okay.
So there is no licensing issue as such.
For the acquirer, potential
Yes.
acquirer.
But potential acquirer might have to go surrender one of the licenses if that happens to be a banking company, because we don't know that who will come out as a successful bidder, who will be the potential bidders would be. These are potential bidders. Depending upon expression of interest, we have to move. It could be NBFC. In that case, a license would be required. In case of it is a banking company, then one of the license has to be surrendered. There can't be two banking licenses. So there has to be a merger. So, and if, of course, there is no banking license, then the bank license would have to be granted under the BR Act.
So how will it work, sir, in case a private equity firm or private equity funds are interested? Because there was a lot of, interest apparently that was shown by them. I think some of them participated in your roadshows as well.
The banking license is there with the IDBI. So once anybody who holds the shares, the IDBI, the license is given to the entity. So it's an IDBI bank which has got a license. So, and that will be continued.
Okay.
Irrespective of change of ownership.
Okay. And so in the consortium, potential consortium of bidders, you can also have private equity participating. So how will that work? There was something regarding a 15% shareholding norm or something of that kind. So if you can just clarify.
No, there is, we have upfront stated after discussion with the RBI, and that's where it is. We have listed the kind of entities which can come in. And either they can come in singly, as that means as a sole bidder, or they can come in a consortium.
Okay.
And any of the entities can come as either as a sole, 60% full, or the consortium can come in and bid for that 60%. So there is no difficulty. from the point of view of who can come in and who is not. That is upfront stated in the EOI.
Okay, so this 15% odd that was being spoken about, 10% all that cap and all, it becomes irrelevant now after
Exactly.
this invitation EOI, right, sir? So last question, sir, how are you looking at your disinvestment trend in the current year? And there are some numbers which are there. Obviously, there's a budget target. You've also done LIC. So how do you see this panning? And you also have HZL somewhere on the horizon. Everybody is hoping that you will do follow on in the current financial year itself. So where do you see things going, and what your numbers also?
I think
Something you can share.
I think we always, as a market player, disinvestment is, as you know, is market related. We have certain transactions which are ongoing. There are certain transactions which are at the EOI stage. There are certain transactions which are more advanced stage. In a couple of cases, there is a demerger process. In one case, it has happened. Then it will go for
That is
listing.
BML.
BML. Then there are others in the pipeline
Shipping
as well, Shipping Corporation and so on. So, I mean, this is a process which we have because of the nature of the disinvestment process and strategic kind. And on the other side as well, in terms of market dilutions, there also, it depends upon the market situation of that particular company. So I think depending upon opportunities, we will continue to do our disinvestment process in a calibrated way.
As you have. Any other UI we can expect in this quarter, sir? There was an expectation about Concor. Sometime March end, you will be ready to come out with the UIs?
Well, I think in Concor case, we are just waiting that subsequent to the LLF policy, there has to be a proper notification from the railways, and I think then we would be in a position to move forward.
Thank you, sir. Thank you so much for giving time to CNBC-TV18. Always a pleasure, sir. Thank you very much.